Good morning, afternoon, and evening to our global audience. My name is Maura Hart, and I'm a manager for knowledge and communications here at Women's World Banking. We're pleased to welcome you to today's webinar. Just a few housekeeping matters before we get started. This session is being recorded, and we will send this recording to you at the conclusion of the event. You can also submit questions anytime by typing them into the GoToWebinar's questions feature. They'll be answered by our speakers later in the session. With that out of the way, I'm happy to introduce our moderator for today's webinar, Jennifer McDonald, the Director of Product Development at Women's World Banking.
Thanks, Maura. Thanks to everyone for joining us for this webinar. We're going to be talking today about promising approaches and lessons learned as regulators and financial institutions work together to create accessible and profitable financial access for women. We're joined today by Mercus Chigoga, Head of Personal and Business Banking at NBS Bank from Malawi, and Yananga Phiri, Principal Examiner, Regulation and Policy, Reserve Bank of Malawi. And they're going to be talking today about the development of Pafupi Savings, which is NBS Bank's digital savings product, as a case study. Before we get going, I'll give a brief introduction to Women's World Banking. Women's World Banking is the global nonprofit that's devoted to give more low-income women access to financial tools and resources that they need to build security and prosperity. We've worked for more than 35 years with financial institutions to show them the benefit of investing in women as clients and as leaders. And it was in this capacity that we worked with NBS Bank in Malawi to develop a digital banking product for women that would help to increase access to savings, particularly in rural areas. A little bit of background on the Pafupi project. This was a strategic partnership that was developed with UNCDF MicroLead, and its objective was to increase access to savings for the low-income market, focusing specifically on women in rural areas. Why did we work in Malawi? Malawi has a very low-income population, and it really highlights the challenges of reaching low-income communities through access to income, education, and financial access. Malawi is one of the 20 poorest countries in the world. It's predominantly rural, with over 86% of the population of the 7.6 million people that live in Malawi living in rural areas, and 41% of the population depending on farming as their main source of income. 78% of the population has primary education or less, and women in Malawi are significantly less likely to have access to banking services than men. 27% of women versus 37% of men have bank accounts. That means that over 70% of women lack access to banking. The face of financial exclusion in Malawi is predominantly rural and predominantly female. We chose to work with NBS because it was a leading commercial bank in Malawi that already had a very significant footprint nationwide and had already made some initial steps towards really looking at how they could serve the low-income market, particularly addressing some of the main challenges, such as distance from banking infrastructure. It was using some new innovations in the market to be able to extend its network of branches, and also looking at how it could develop more competitive products for Malawians. NBS Bank had set a goal of growing its market over 3 years, and in addition, due to its positioning as the caring bank in Malawi, it was well positioned to really capitalize on that and take services to the rural areas. So for this reason, it was a partnership that made sense. We saw a sincere commitment from NBS Bank to really look at how they could serve that market. Additionally, only 31% of their existing customer base were women, and they were very interested in exploring how they could reach women with better designed products. The project started, as with all of Women's World Banking's initiatives, with in-depth customer research that really helped to inform how the product would be designed. Some of the key findings that when we went to do the research were, first of all, understanding what motivated low-income women in Malawi to save. And there, 3 clear savings goals emerged. For education, which is really the key to opening access to the chance for a better life for low-income people. For emergencies, to offset variations that can come from irregular rainfall or other hits to income in agriculture, and also housing improvements. many women in Malawi were already saving actively, using informal mechanisms primarily. They were saving in kind. They were saving in cash at home. They were saving through savings groups, which were really growing in popularity in rural areas in Malawi. And they were also using village banks. One of the main gaps that women felt when asked if they were interested in a bank account was that banks were really out of reach. They saw having a bank account as highly aspirational, but something that wasn't for them because of the distance, because of lack of awareness of bank offerings, and also because of emotional distance. One of the things that struck us the most when we were doing our initial customer research was the way that if we asked women about distances, they immediately translated it into costs. So they would say that to go to town would cost 700 kwacha, whereas to go to someplace that was closer would only cost 200 kwacha. So that really puts into perspective the way that distance can be a barrier, not just because of the physical distance, but also because of the cost to get there. So it was very important with the Pafupi Savings Program to address all of those barriers that women felt and that were really inhibiting them from accessing banking services. So with that, we designed, together with NBS Bank, the Pafupi Savings Account, which aimed to address many of those barriers that would enable women to have access to banking for the first time. The key benefits of the product as they were presented were that the account would be close to you. It would be that customers would have access through small shops where they live through agency banking, that no amount was too small to save, so that we would offset that idea that you had to have a lot of money in order to have a bank account, and that the account would be affordable because of the pricing mechanism. The model that was developed in order to deliver Pafupi Savings was an instant account opening process, so that there was a mobile sales team that would move out into rural areas and be able to open accounts on the spot. The account opening process takes less than 10 minutes and can be done anywhere, including in a market area, at someone's home, at a cooperative meeting, wherever it was convenient, using a starter pack that provided instant access to an ATM card. The process works by having a mobile salesperson capture the data of the client through a mobile phone, and it's transmitted instantly, and the account is activated. And the client immediately receives their ATM card together with a debit card and PIN. In order to make this possible, there were a couple of key things that needed to be in place. The first was to have access to simplified Know Your Client regulations. This account is opened using simplified ID requirements so that it could be open with a range of different types of documentation that low-income women in rural areas would have access to, including a voter card, as you see on the slide. The simplified KYC enabled the customer to have access to an account that had some limitations on the volumes that could move through the account, but it enabled them to open it with a type of documentation that they had and effectively removed a barrier for them. Additionally, it was very important to provide access to the savings account to the women where they were, so that we would be able to eliminate some of those barriers like distance. So for that reason, the bank relied on its branch network and its ATM network, but additionally on the Bank Pafupi agency banking network, which as of today has over 200 agents across Malawi. The network operates both on mobile and on POS in order to offset any potential difficulties with connectivity. The product was launched as of October 2014, and the results as of November 2016 are over 75,000 accounts that are operated by a mobile sales team, that are opened by a mobile sales team of approximately 80 people. There are over 200 agents, as I mentioned, in addition to the bank's network of 32 branches. And more recently, a pilot has been initiated to enable the fixed agents also to open accounts. There are 12 agents that are opening accounts right now as a pilot. And interestingly, approximately 47% of them are to women, as compared with about 30% of women in the product otherwise. So it seems that opening accounts through agents has been an additional step that the bank can take in order to greatly increase access to women. There were many innovations that were introduced through the PUFUPI project, and many of these required regulatory approval or collaboration with the regulators in order to determine how to implement the product in a way that would meet regulatory requirements and also effectively remove barriers for financial inclusion. Let's turn now to our panelists to discuss their experience of partnership in this product. Mercus. As head of personal and business banking at NBS Bank in Malawi, you've been leading the charge and the champion for developing and expanding the PUFUPI savings product. From your perspective, what were some of the key steps that were needed on the regulatory side to enable the PUFUPI project to be introduced by NBS Bank?
Thank you very much, Jennifer. Indeed, as you have highlighted in your introductory remarks, there were quite a number of innovations that we felt would enable the bank provide the access that the rural people, including women, needed to have financial access and services. So one of the key challenges in Malawi is that the normal requirement in opening a bank account is that you must have specific IDs. And these are either you have to have a driver's license or a passport, which are very costly and very difficult for people to get. So most of the people in the rural areas don't have. In Malawi, we still don't have a national ID, and that's why this is particularly important. So one of the things we did in working with the regulator was to ask for a waiver, knowing that people in the rural areas cannot afford these two required formal IDs, which the regulator granted us, and that we can use a chief's letter, which is simply stamped, and then they can use that for their transactions or their voter ID. So that worked very well for us and for the target group. The other thing that was also very critical is that as a requirement from the regulator, if you opening your account, you have to fill physical forms, documents. Now, Malawi has a large population of adult population that is illiterate, roughly about 35%. But this is also even worse amongst rural people and women. Women think about 41% out of the average of 35% who are illiterate. So this, for the target group, also posed a challenge. So one of the things we did was to use technology to develop a solution that Jennifer, you spoke about, where you use a mobile phone and open an account in the field, right in the field. But this required the regulator to also waive the standing requirements at the time. And this they also granted us. And that helped us a lot, because without that it would have been very difficult for most of these people, because through research we found actually that a lot of these rural people also keep away from opening bank accounts with banks because they feel uncomfortable exposing their illiteracy. So this helps them quite a lot, because then the salesperson in the field captures this data through interviews with the prospective customer, and then using technology we transmit that into our core banking system. The other point, which is critical, that's the third point which I want to share here, is about the account turnover. Because of the relaxed KYC from the regulator, and in keeping with the managing the money laundering issues in the country, they put a limit. And the limit is that there must be a 50,000 kwacha account turnover per month on the account. If it exceeds that, it means that the customer would require to then improve on their KYC. So this is one of the discussions we have also had with the regulator, and this is still in discussion with the regulator, which I think we'll expand on as we move forward. But these were the three very, very critical elements that we worked with the regulator, and the regulator actually helped us by waiving them. Thanks.
Great. Thank you very much, Mercus. From your perspective, Are these innovations something that you're seeing from others in the market, or what has caused NBS to really try to address this market in this way? What motivated NBS?
Okay. Number one, NBS Bank, one of our guiding philosophies is a caring bank. And through research that we took, we discovered that there's actually a huge gap that exists in the market. We're talking about people living in the rural areas, people who are not educated, but they are economically active, but they didn't have easy access to banks. So as a bank, we said, how can we take full advantage of this existing gap by providing financial services? And out of that, we went out and did quite a number of series of research to try and understand this target market, what their needs are, the levels of income that they generate and how they generate them, their needs for financial inclusion, etc., and what sort of channels could be used for them, for easy access for them to access financial services. So coming out of that, we learned quite a lot. And because as a bank, one of our key strategies has been to mobilize low-cost deposits, or what I would call cheap deposits. We felt that here exists a gap. Customers that are looking for financial services, and we can easily tap into that by innovating and providing the financial services. So then we came up with a product that was also researched with the customers. There were quite a number of iterative processes that we did in the development of the product to make sure that it fitted very well with the target group. So when we came up with the Pafupi savings account, it was based on the full understanding of the target audience, their needs, the kind of access that they needed, and because it fitted very well with our strategic imperatives, it was very easy for us to go for that market, and it developed the innovations that we developed. These were not existing in the market at all. They were developed from ground up. So we're actually the first movers in the market in Malawi to come up with this innovative product for the low-income people and rolled it out.
Great, thank you very much, Mercus. Yananga, thank you so much for joining us from the Reserve Bank of Malawi. Could you speak a little bit about how Reserve Bank of Malawi has worked with NBS Bank to enable the introduction of an innovative approach like Pafupi savings?
Thank you very much, Women World Banking and NBS Bank, for bringing us together. The role of central bank in the bank Pafupi primarily stemmed from the creation of a stable and enabling regulatory framework, for which we had consulted the NBS Bank, among other players, extensively. For instance, when we were developing the agency banking regulation that later supported the introduction of Bank Pafupi. Apart from that, we also consulted the bank on e-money regulation that supported NBS Bank rolling out of the product, as well as providing even further opportunity for it to partner with telcos. But we also moved on to, over the years, to relook at our AML regulation. Like Mercus hinted that there were certain limitations that the regulation presented in terms of the requirements. So in 2016, that's after 2 years from the launch of the product, we, drawing from the feedback from the bank and the other stakeholders, we also had to review the regulation to allow for simplified KYC. But having said that, we also played a role from the point of view of approving the product by carrying out the risk evaluation so that to balance the risk vis-a-vis to protect the consumer. At the same time, ensuring the target segment that is being earmarked and how it's going to act on them. We also looked at issues of the product offering, how relevant it was, and whether there could be some other aspects like bundling of the product. For instance, the training, you're talking of maybe on how to manage accounts and what have you, especially for women, which NBS Bank has proven to be doing. But we also looked at the staff, whether the staff that will be managing this business proposition have the acumen, and it turned out that indeed NBS Bank demonstrated that the staff they have that entrepreneurial acumen that would make them help to develop what I would call a human-centric product. And that is even propelled by the fact that they were using agents who have a better understanding of the dynamics of the clientele that they were targeting. Basically, that's how far we went. But over and above, through our engagement with the bank, we also, the registrar, under his powers, had to exercise, to grant waivers to the bank, like Mercus hinted, on opening of accounts, as well as on other innovations that the bank was putting forward. The bottom line is that oftentimes regulation does not move as fast as innovation, and it was on that basis that we thought it was only proper that sometimes we can adapt regulation by adapting to the innovation, while at the same time giving a leeway for learning by doing through pilots. Basically, that's for the time being.
Thank you very much, Yananga. So what I've heard you say there is that what was really important for Reserve Bank was to ensure that the staff that were leading these kind of propositions really had the capacity to deliver high-quality initiatives to rural women, making sure that the consumer education component was really part of it, and ensuring that the product was relevant. So that's a very good endorsement of what NBS Bank has brought to the market. I think it's very interesting what you said about about the pace of regulation and the pace of innovation, and how to ensure that regulation is able to support innovation by enabling institutions to learn by doing. I'd like to come back to a couple of the initiatives that that the bank and Reserve Bank have been working together over the last period. There was one request for a waiver that that the bank raised. I think, Mercus, you saw the opportunity to extend what you were doing with Fufupi Savings, not only by having your own sales team that was moving around, but also enabling the fixed agents through the agency banking model to open accounts. And this is an issue that regulators in different markets have taken different positions on, yeah. And defining the role for those agents to be able to facilitate that, you saw as a great opportunity. Could you talk a little bit more about how that process went and what the dialogue with RBM was on that?
Yes, sure, indeed. Thanks, Jennifer. You're very right. At the time, before we went to the regulator, the regulation was that for any agent that was involved in agency banking, they were not allowed to open any accounts simply because they wanted the bank to take full responsibility of making sure that the KYC issues were handled properly, and that indeed also other issues are taken care of so that the customers are well protected, etc. So the agent was only allowed to collect maybe account application forms, and they could forward them to the bank, and then the bank will go through the process of opening the accounts for the potential customers. Now, what we did was after we had rolled out the Fufupi Savings and the Bank Fufupi, which is the agency banking, and after producing quite a number of excellent indicators, we went back to the regulator with a case study to demonstrate that we have developed the channel, and we are working very closely with the agents. We've provided them with training, we're doing the monitoring, etc., and they're really doing a good job. But we thought that an opportunity existed for them to do a lot more than what they were doing at the time, which was to open their accounts. And one of the things that motivated us to do this is that these agents are within the localities where their customers come to do their various businesses, And if they want to do any banking services, including opening an account, it will be happening within that community. And these people have quite a lot of rapport also with the people in the communities. They know each other, etc., etc. And it will provide quite a lot of good facilitation for them to handle this. So we went to the regulator. We presented our case study. We had a meeting with the bank supervisor and presented our case. And because of the because we've moved together from the inception on these two key projects, and that the regulator has developed quite a lot of confidence with what the bank is doing, and then hearing our case studies and etc. The regulator looked at our case. They had their own internal discussion, and they came back to us in March last year in 2016, granting us an additional waiver that now we can allow our agents to actually open accounts. They gave us quite a few guidelines on what needed to be done on the ground to make sure that we are fully compliant, including the fact that we had told them that we would first of all pilot making sure that we gather as much learnings, and then after that we'll do our assessment, etc., and then we will be rolling out. So we've been granted that waiver on that strength.
Great, thank you very much, Mercus. And Yananga, on that kind of initiative, could you speak just a little bit more about how you perceive that process of dialogue with a bank like NBS, on requesting that type of waiver to be able to go ahead with one of those learn by doing type of pilots? So how do you see the bank's position on that kind of initiative, and how does Reserve Bank see that?
Like I said, the waiver was on this understanding that if we allow them to pilot, then we would also be monitoring how they are doing it and to see whether there's compliance, while at the same time weighing the impact. And from that pilot, it came out clear that the bank complied with all the set requirements, and that it even created meaningful impact on their how they motivated the account opening and maintaining, in the process, spurring financial inclusion. So we did not have problems supporting it, and we still monitoring the progress and how other institutions would want to emulate from that proposition.
Thank you very much.
But the important thing,
please go ahead.
Yeah, the important thing is that the bank, as a principal, is responsible for the conduct of its agent, and therefore collection of information and submission of reports was vital for this process. And we are delighted that NBS Bank lived up to that expectation.
That's very clear. Thank you very much, Yananga. I think Reserve Bank of Malawi deserves credit for taking an open-minded stance on that, and also seeing the role for agents to collect information digitally as well as on paper, and be able to relay it to the bank in that way. An additional initiative that I think that the bank and Reserve Bank have been collaborating on is reviewing the balance limits on simplified accounts. I think the situation is that it had been 50,000 kwacha, which was a limit which was set in currency terms some time ago, and then since then there's been quite a significant devaluation of the Malawian kwacha, so that limit today is quite a low limit. I think it's equivalent to about $70 right now, if I'm not mistaken. How has that dialogue process gone? The review of limits to enable the account to be relevant to more people, and what kind of information is being exchanged?
So I will take that one first before Yananga maybe comes in. That is very correct. 50,000 kwacha is the limit even up to now, but obviously we noted already that this was a big constraint on the customers, because when we rolled out the Pafupi savings account, what we discovered was that there were quite a number of people within this target group that don't have these formal documents. We are talking about like the driver's license or our passport, but they're doing some reasonable small businesses that are generating them much better incomes and turnovers than the 50,000 kwacha. And so this became quite a bit of a challenge. We have engaged the regulator several times, I think from 2015, where we made our initial application, but initially they just told us, no, we can't, this is the regulation, it's 50,000. But then it transpired within the same 2015, we had a meeting with quite a number of officers from the central bank, the regulator, and in the course of that discussion, I had raised the point to them, and it was quite an eye-opener, and it transpired to us actually that the regulator openly said, look here, we didn't understand because you guys had written, and I think it must have been an error from our side because we wrote to them, said we didn't understand as well as you have explained it. There is room for a dialogue. So we took that opportunity and had further discussions with them. So in 2016, we went back and met with the officers, including the bank supervisor, and presented our case there. And they are quite positive about supporting us. They agree actually that the 50,000 kwacha is on the low side. The challenge that faces us today is that this figure, or the ceiling that was set, is part of an act of parliament as part of the anti-money laundering and the financing of terrorism and stuff like that. So it required that the financial intelligence unit needed to come on board, but the bank supervisor promised us that they would actually engage with them and have a discussion with them. The bank also had a discussion separately with financial intelligence unit who are driving this angle with the parliament, of course, obviously in support with the regulator. And then the regulator told us that the matter was going to be presented in the sitting of parliament after July last year, I think the November sitting of parliament, which indeed was the case, but unfortunately it seemed like the legislators had different priorities, they ran out of time, and this matter, I think, was not discussed. There were quite a number of issues that they raised, because it involves quite a number of other bigger issues that are involved in this discussion in Parliament. So it was shelved. So as we sit today, matter is still in discussion. It's moving too slowly for us as a bank. We would rather they moved very quickly on allowing people to increase the turnover as quickly as possible. I don't know whether there could be a way that they can do that even outside the Act of Parliament, but it seems to wait for that Act of Parliament. But I think Yananga perhaps may provide a lot more insight on what is going on in there. But between us and the regulator, we are well aligned. They are supporting us. And like Yananga hinted, the regulator, after our several engagements that we had, they actually came back to us and requested from us a lot of information, including what new limits do we want to set, etc., which I felt was very positive. And then they collected all that information, and that's the information they are using to engage with financial intelligence units and the other key stakeholders that are involved in making this decision. So Yananga, perhaps you would want to come in. You may have a better understanding of what's going on there.
I'll just comment there, Mercus. I think the example that you've given really clearly demonstrates how the central bank doesn't act alone, but also there are other stakeholders that are involved in providing the framework for appropriate regulation for financial activities. And I think it is a very good example of how the information that's collected from the market and from private sector actors can really be centralized within the central bank and communicated to other stakeholders in a way that can make a difference for regulation. Yananga, would you like to comment on this issue and how you see this issue of responsive regulation?
Yeah, thank you very much. I would start by saying initially the understanding was that as the customers graduate to their incomes grow, then they will be able to have the standardized identification. But I would agree that indeed the value has now been eroded, so the limits may be restrictive, and it's agreed. We unanimously agree that the limits need to be changed, but the process of changing the act, as Mercus hinted on, involves various stakeholders because it relates to an act, and that the other stakeholders like the Financial Intelligence Unit, government, and law commission into discussion with the central bank as well. And unfortunately, I cannot give the position as it is now, but dialogue is ongoing, and everyone seems to agree that indeed the thresholds have been rendered not realistic. The sad part is that oftentimes regulation should not be changed out of a knee jerk, but that there should be indeed sort of a demonstrated need for change, which in this case seems to have been noted. But dialogue is ongoing, and it looks like progress is there. The sad part, as Mercus indicated, that was that maybe the issue at Parliament was not, Parliament might have little time to go through all the amendments, but dialogue is ongoing, and the stakeholders are engaged.
Very good. Thank you so much. Yananga, as a follow-up question to that, it's clear that regulators have a really crucial role to play in closing the financial inclusion gender gap.
Mm-hmm.
Could you speak about what other efforts Reserve Bank of Malawi has been implementing to increase national financial inclusion? And additionally, how has consideration of women's needs been incorporated into what you're working on?
Okay, thank you very much. Broadly, there have been several strides that the regulator has made in that respect. For instance, over time, the regulators moved into also develop a framework and actually licensing non-bank formal institutions, for instance, the financial cooperatives and the microcredit agencies, for which it has shown that women have participated more in that sector than men have. That is by the FinScope study of 2014. But apart from that, the regulators have also moved in to support efforts to develop framework and licensing and the operationalization of the Credit Reference Bureau scheme, as well as the development of the movable collateral registry. Financial inclusion, as you'd agree with me, is not just about access, but also usage and quality. And therefore, the understanding is that the reputation collateral that would be developed through a Credit Reference Bureau scheme would go a long way in help bolster usage and quality of financial services that the consumers will derive from that. And that is even vital for women, especially looking at the fact that women may not have the traditional kind of collaterals that traditionally banks would be looking for in the absence of credit reference bureau, in the absence of credit movable collateral registry. But in addition, further efforts have been made with regard to requiring banks that they should have mechanisms and structures in place for handling complaints, as well as financial consumer education and the consumer awareness on the products, as well as the uniqueness of the product, how different they'll be from other products and the unique features of those products. In fact, apart from that, we've also been in collaboration with other stakeholders. For instance, the Reserve Bank is collaborating with the University of Malawi in research, and potential areas for future studies include the financial inclusion aspects that relate to gender-specific barriers for women, and it is believed that that kind of studies would open up avenues on how the policies would be developed to address the gender aspects of those barriers. In addition, under pilot we are piloting with the IMF the collection of data from financial institutions that disaggregate on account of gender. We believe that would also help inform the gender-sensitive policies that should support financial inclusion. That's to say the least for the time being.
Those are really excellent points, Yananga. Again, I congratulate Reserve Bank of Malawi for its efforts in this area. We've definitely seen collateral availability being such a critical barrier for women, particularly in accessing credit in so many markets due to having fewer assets in their own names that can be pledged. So movable collateral sounds like a great initiative. And additionally, I'd really like to highlight what you've said about the need for being able to track performance on gender as at the bank level. Many banks do not collect this information, and if we want to understand how well we're serving women over time, it's necessary to have that. So I commend the Reserve Bank of Malawi for those initiatives. Turning back to NBS Bank, Mercus, as NBS Bank continues its commitment to bringing women into the formal financial sector, what other innovations do you have in the pipeline, and how do you see your ongoing relationship with the Reserve Bank as supporting that?
Thank you very much, Jennifer. Yeah, we are looking at quite a number of initiatives. The first one is currently we are working with the an organization, a microfinance in Malawi called QMO. What we're doing is now taking Pafupi savings product to a higher level. QMO as a microfinance has groups of women that are involved in loan products with QMO. So these are savings groups. So what we're trying to do is to develop a savings group product targeting various savings groups that are in the country, and we are piloting with QMO. So this is one area. So what we're doing at the moment is we've developed the product, we've moved into pilot in a number of selected locations, because the requirement is that when we're getting to the regulator, we should be able to demonstrate that we've got a solution that can actually even work for both formal and informal savings groups. So that's one of the key initiatives that we are working on, for which we would require further support from the regulator. The other elements that we want to bring on board, obviously as a requirement, is we would also want to run them through the regulator, is we're also looking at the channels themselves and see how we can add more value to the channels. At the moment, the basic activities happening there is people go there to do with deposits and withdrawals. But we think that we can also bring in some value-added services, so people can pay for utilities, and they can do all sorts of other value-added services. So that's one other initiative that we want to bring on board, over and above the account opening we mentioned for the agents for the time being. Yes.
Great. Thank you very much. Thank you very much.
Good.
We have some time left in the webinar now for some Q&A. We are getting some questions from the audience. If you do have a question, please feel free to send it using the chat function to the organizers as discussed. I have a couple of questions to kick us off here. So Mercus, the first question is the business case question. Does NBS expect Pafupi savings to be profitable, and what are the main cost drivers and revenue drivers for Pafupi savings?
Thank you so much. Yes, indeed, we are expecting the Pafupi savings product to be profitable. For us, when we look at the key drivers for the product, clearly this is a product that hinges a lot on volumes, and these are volumes of the numbers of our customers, but also transactions. The frequency of transactions are very critical because it's a low-cost product, and the more people come to transact, the better it is. And as we do that, we have to make sure that we keep the cost of delivering this product as low as possible, and that's why we are using all these innovations and using the agency banking as the main channel for their transactions, etc., and then using the sales people that go into the fields using less costly means of transaction, but progressively also start relying more and more on the agents to open the accounts so that we minimize the traffic of our staff getting into the communities, but relying on the people who are already there to do the transactions.
I think that's a great point, Mercus. It really highlights the importance of some of the changes to the product that the relationship with RBM has facilitated. Of course, doing a low-cost savings initiative really requires working on many different cost levers and revenue levers in order to reach profitability. Mobilizing small balance deposits can be a tough business to make a business case for, but I really commend NBS Bank for taking a very business-focused approach on it. You're there to bring banking to people in low-income areas and rural areas, but also, it's not a CSR initiative for NBS Bank, and I think that's important to underscore. Yes. I think you've highlighted a couple of good points there. The role of relying on existing capacity in the communities through the agent network rather than having staff who are going out there to do it was really critical to be able to reduce the cost of the proposition over time. And I think the other one to highlight, which also speaks to the other initiative that's still ongoing, is the need to grow balances on accounts, right? So as it is now, with that cap on the balance that can come into that account with the simplified KYC, you do have some reduction in the balances on the accounts as a result. I was looking back at some of our research that we've done together on the product over time, and noticing that some of the impact of that limit can be to reduce the number of accounts that are opened, because there may be some farmers who, when they hear about that limit, think that the account is not really for them, because when they get the proceeds from their crop, the amount, because they're getting a lot of income in one go, that amount can be much higher than the 50,000, even for smallholder farmers. And additionally, that fear of what happens if I surpass that limit, what happens if I need to save more in the account. So I've heard you say that a lot of people don't want to open that account because they see the limit as a hindrance.
Correct. That's very correct. In fact, it started happening already. A lot of people got excited, but when they heard about the limit, then they moved back and say, okay, look here, I would need an account where I can deposit a little more. So if this regulation is passed and we are allowed to have a higher account turnover, it's going to go a long way in accelerating the success of Pafupi and for us to attain the profitable levels very quickly. But without it, I think it's still going to go very slow, because 50,000 is just on the very low side. That's correct.
Great, thank you. Next question, I think to both of you. There's a question about what's the best way to communicate with low-income women clients who are not educated or who are not comfortable with English. So there may be some technical aspects of banking that need to be transmitted to low-income people where language can be a barrier. So Mercus, maybe you could talk about briefly how that was addressed in Pafupi, and then Yananga, if you have some learnings from the market or how RBM is seeing this, you could also speak to that on consumer education, since you've highlighted that point.
Yeah, okay, thank you so much, Jennifer. One of the key drivers for a product like this is communication, and the communication in a manner and in the language that the target audience can understand. And this is a group that is not very financially aware. What we found very useful that helped us at the rollout of this product, and indeed coming from our research understanding, was we came up with a bouquet of activities that we took to the market. So a number of things that we did. We prepared some brochures or flyers, if you want. We prepared some posters, etc. But we were very mindful that as much as possible, the communication materials, printed communication materials, must have less of the text, but more of images and the illustrations of how the account works, etc., etc. So it becomes very easy when you explain to them and you leave them with a brochure. They can reflect back on the pictures and the images on the printed material and try and still remember what has happened. We also developed radio communication in vernacular to help people fully understand what we are doing. We have done a lot of market activations. Some people like to call it experiential marketing, where we hire the experiential agencies to go out into the communities and educating people, showing people and explaining to people what the product is all about, and engaging with them. Very interactive programs, not just dishing out the information, but getting them engaged into the whole process so that they can go away remembering what has happened. And then in the process of doing that, we had our sales agents, the sales staff in these activation programs, who were then opening accounts right there where we are handling these things. And the other thing we did also was in the communities, we trained some people who could actually act as the representatives within the communities, and then there could be the influencing teams to help others that may be less knowledgeable about financial products, etc., and they can help communicate to them in the language that they understand. So these were the key elements. Printed material that was more visual than text, vernacular radio communication, and some TV communication as well, that demonstrated the benefits and the mechanics of the products, and then the market activation programs were the major key ones that we took into the market. So these helped us quite a lot.
Yeah, thank you very much, Mercus. And I think to your point and also to Yananga's point earlier in the webinar, having staff that are really trained to be able to transmit the key information to low-income women in a way that's accessible and approachable to them has been shown to be a very effective strategy, which you've done through your direct sales team, yes, as well as through the now increasingly and going forward through the agents that are located in the communities. Yananga, what additional points or how is RBM seeing this issue of how to do effective communication and consumer education for the low-income market in Malawi?
Thank you very much. Like Mercus correctly mentioned it, what I would want to add is that, like I said earlier, an important aspect is also bundling of the product with other incentives, like for instance, training. I thought that is important. And apart from that, one would also want to look at, besides road shows, one would also want to look at the role models in the society, be it church elders, to use them to impart the message about financial products and financial prudence and that kind of thing. And one would also want to look at what is often termed as teachable moments, like providing the relevant information about savings and credit, for instance, during weddings or during at the point when people are starting to get loans to send people to school, that kind of thing. But over and above, the also issue of putting it in local language is very important. And if I should recall very well, NBS Bank was one of the pioneers of using local language in communication over the ATMs.
That's correct.
The vital thing to also remember is that we should not look at just marketing, but also look at it from the point of view of educating the consumer, bearing in mind that you are building trust, and by building that trust, you are also reinvigorating that brand of the bank, and that even creates customer retention because they develops a sense of belonging. Yeah.
Thank you, Yananga. I think that's a very strong point. I think it really underscores the responsibility that financial institutions and financial service providers in general have to take for providing clear and complete information to low-income populations that may be experiencing banking for the first time, to ensure that they are able to make an informed choice. As well, your point about communicating in local languages and taking responsibility for communicating clearly. I think there is great potential for financial institutions to really reach new markets in that way if they take those lessons to heart. We have time for one more question before we wrap up, and I'd like to come back to the issue of how well are we serving women, since there are quite a few questions that relate to that. There's a question to clarify what percentage of Pafupi customers are women, and what we've seen is that the account was designed in order to reach women, and yet still we're at about 30% of women, as against 50% of the population. So there's a question of, if it's less than 50%, why? And then there's a question to, so I'll direct that question to Mercus, and then Yananga. There's a question of how exactly are you monitoring and evaluating progress on that indicator of women's financial access on a regular basis? Mercus, could you speak to that point?
Okay. Yes, thank you so much, Jennifer. In a country like Malawi, women face quite a number of obstacles and barriers. And one of the things that we have learned in the process of developing these products and marketing them and taking them into the market is that women are doing a lot of economic activities, and some of them doing pretty well. But I think we still have very strong cultures in our communities that are still affecting decision-making amongst women and empowering them to make their own financial decisions. I'll give you one or two examples. You find a woman is doing a business, and this we found in the course of engaging them, etc. And they're very willing, they understand the benefits of accessing these products and services, but they are unable to make decisions on the spot because they have to make references to their husbands, even though perhaps the business is entirely owned by the woman, but they have to still have a discussion with the husband whether indeed they can open an account, etc. So this is one of the biggest barriers that we have seen for a lot of women in participating in this. And it is an issue that goes beyond what a financial institution like NBS Bank can do. At one of the conferences, I raised this issue. It was an ECAMA conference where I felt that it is important that this issue should be taken at a policy level, where we need to come up with the clear solutions on how we can sort of, in quotes, emancipate women, empower them so they can make their own decisions. But this is quite entrenched in the rural areas, especially amongst the less literate communities, where people still think that the husband has to be involved in the decision and should be the one to decide on. So these are some of the barriers. But over and above that, we know that it's going to take a long time to do. So some of the things we're doing as initiatives on the bank to try and still drive these numbers, make sure there's more women inclusion in financial activities, is to provide specific incentives to our teams that when they go out, they should also put a lot of effort in knowing that it will take perhaps a number of engagements with a woman, perhaps 2, 3 more engagements with a woman than a man before a woman can decide to open an account. So they should be able to invest that much time, and that they would be compensated for investing that kind of time and to get a woman on board, etc. So these are some of the initiatives that we are taking on board to make sure that women are given enough and adequate chances to open accounts.
Thank you so much, Mercus. I think you've really hit the nail on the head there. What we've seen in so many markets is that women do need more information before taking a decision to go forward. And as you mentioned, they often like to consult family members. And I think to Yananga's point, the opportunity to use influencers in their markets, to be able to give them confidence that it is something for them, and to normalize that idea that a woman can take a decision about a formal banking account, by herself and be empowered to do so. But in the meantime, giving the signal to your team that it's worthwhile to spend the time to address their questions, because I need more information is not the same as no, I don't want the account. Yananga, I think we just have 1 minute, but I would really like to give you the opportunity to respond to that question about how specifically you're tracking on that indicator of women's financial access and how you're evaluating it, just as we wrap up.
Okay. Briefly, number one, we've had demand side studies, the FinScope of 2008 and that of 2014. But over and above that, Like I said, we are piloting the collection of data that is disintegrated on the basis of gender. And that kind of data would inform us on how we can chart the reporting formats in future to help us at least monitor the progress with regard to gender aspects of financial inclusion. But apart from that, we also draw insights from our peers within the region where we feel they have done policy interventions that have worked for women. But the important aspect is that we're moving forward towards collection of data that is segregated on gender consideration.
Thank you so much. I think that's very valuable information and also so important for the Reserve Bank of Malawi to set the tone for the market to say that tracking on how well we're serving women is important. I'd like to close now. Thanks both to Mercus and to Yananga for sharing their experiences and their perspectives as a private sector player, a commercial bank, and the Reserve Bank of Malawi, the regulator and central bank in Malawi, for demonstrating what can be achieved when those two sides work together to advance financial inclusion for women. We also are very grateful for UNCDF MicroLead support for making this happen, as well as for their ongoing support and partnership in women's financial inclusion. We'll close now.
Thank you, Jennifer. This is Maura again, and thank you to all of our listeners who came in, participated, and submitted questions for our speakers. There were lots of great questions that we didn't get to, so we will be writing a follow-up blog on the Women's World Banking website, and we'll make sure all of you receive that to get a bit more information about this interesting topic. We'd also love to hear what you thought about the webinar, so please answer a 1-minute survey. The link is in the chat window for you there. And thank you all very much, and we wish you a great rest of the week.
Thank you.
Thank you.
Thank you to all.